Hey traders, this is Ron Haight. Happy Fun Day Monday. Hope you guys had a great start to your week. As always, everything in this presentation is for educational purposes only. We'll kick off here with the Dow ETF, the Diamonds DIA, finishing higher by 37 cents, closing near the highs of the day. Again, bulls have control of this market pretty cleanly right now. I had some other questions on the Mouse House. And in a members webinar over at Financial, what I talked about was when we see such a big move, sometimes what can happen if you go top to bottom and get maybe about a 50% retracement, which would have put us right around that 142 into 143 area from this really big candle. But if we don't even get down there and we reverse higher, that's typically, no guarantee of course, a sign of strength. And man, Disney was up over 148 today. In fact, if we take a look here, the intraday high was 149, ended up finishing at 147.65, good volume. This is a bull flag, and now it looks like it wants to push higher already. And I keep getting questions also on, how could we see this coming? If you watched yesterday's video, you know what's coming. This Wednesday, November 20th, 12 noon Eastern, 9 a.m. Pacific, I will show you the next group of stocks that are set to soar based on hard proven data, not some opinion of a talking head or whatever. This is just what the stocks historically have done. We put a percentage on it, we just calculate the data, and we serve them up on a silver platter. So if you wonder, how did we spot Disney? If you've been watching the videos, you would have known about it. If you haven't, well then get in this webinar. Half the seats are already gone after just 24 hours of mailing. So we're gonna be maxing out for sure. Tonight's Monday, so we have all day Tuesday, Wednesday. We're probably gonna hit max by Wednesday morning as my guess or sooner. You can register at the bottom of this video or in the email that you received this video on. So look forward to seeing you there. Now let's talk about some other stocks. Had a question on Yum. Yum gapped down on earnings a couple weeks ago. If I zoom out here, the stock went from 110 below 100, and now we've drifted down. We're sort of basing, there is some sort of inflection point, 97, 98 bucks. And what I mean by that is this. If I zoom in, you can see this long tail here. We gapped, well, first of all, the day before we started up here, but then we gapped in the top left of that candle. Okay, right over there. Then we went all the way down here, and then buyers stormed in. So you see this big volume spike, right? Yes, there was a huge 7% or so gap down, but a lot of buying was done. Then we came down, and what do you see? We keep seeing finishing off the lows, especially when we get down here to $98. For whatever reason, we dip below, we come back. We dip below, we get back above it. We dip below, we stay above it. It's like hot potato at 98 bucks. So if I was trading Yum, now this does look bearish. This is a big old bear flag. There's your flagpole. There's the ledge. Almost looks like a chair or an L. We get below 98 in a closing basis, which is only 28 more cents. This to me would be a sign of trouble. And in that case, we want to go down and find the next congestion area or consolidation area. Could be as low as 86-ish, maybe up here in the low 90s. There's a lot of resistance points around, what is that, 92.5 or so. But otherwise, 86 down towards 85. Now, Lyft had a lift today. It popped higher. Uber did not, but Lyft did. So we're focused on Lyft. Here's something else I see. After the big pullback, right, from 65 down to 40, we're starting to see tall bars that are black. And inside TradeStation, black bars mean we finished up on the day. Red bars we finished down on the day. And the black bars are starting to get more frequent. Not tons of them, but they're here. But what's the result of the price action? Here's the low, and now we're pushing higher. What happened today is we closed above previous closing highs. Our previous highest close since the October bottom was 44.42. We eclipsed it by 40 cents or so by about 1%. The next target, it's going to be maybe 5% higher, maybe right up here. It's real small because we did come back up here, hit some resistance for whatever reason. Some selling came in and then we went down. But if we eclipse this 48-ish area, then we start talking back up towards 60, which was the ledge that led to a huge decline. If losing the stock lost a third of its value over the course of about 2.5 months. So I would put alerts around 48 on Lyft. Now here is Weight Watchers, the old WTW symbol. I'm bringing this one in because check this out. The stock in its heyday was at 100 bucks back in July, and it came down to 20. Nice discount. I like discounts, but here's also what keeps me or has me interested. We have seen this sub 20 area, maybe it's a $2 range, supported. We're seeing big black bars coming in, and they won. The bulls won. Now we're seeing a push higher. We had this earnings gap down. Volume spiked, closed back at the highs of the day, even though it gapped lower. But look what happened in the subsequent days. Completely reversed. In fact, if I zoom in real close, you look at this gap down, every single candle's closed basically either mid-range or higher. And today it was the highs of the day. And very subtly, it just eclipsed those previous highs. Barely, but it did it. Now, I'm not saying the stock's going back up to the $100 price target or price point that it was, you know, back in July of what is that, 18. But here's the thing. The next consolidation point maybe is up there at 50. Well, that's almost 50% higher. Then there's a gap fill up towards the low to mid 60s. That's a chunk higher. You get the idea. I would consider maybe the red line, the 20-day EMA trailing stop. How about Twitter? Had a question on this one too. What's up with the tweeters? Here was the earnings gap from 39 down to 30. We're getting somewhat of a beginning of a rounding bottom here, but this is also could be considered bear flag action. Twitter, to me, there's no real high probability trade where I like the reward to risk where it sits now. Two things need to happen for me. Here's a bottom, right around 26 and a half, another one here, and another one here. We get below, I guess we could even say maybe 26.20 down towards, let's say 26 even. Below 26 even, you've broken all three, the triple bottom. The next major support is probably 15 to 20, somewhere way down there. That would be the downside targets. On the upside, if I zoom in, I want to get into the gap. This was such a huge gap that if we can get above this $32 area, then up there towards 39 would be the target. So between now and like 32 bucks, not much going on to the upside, but watch below 26. And then last but least is Walmart. Now, Walmart, I want to go back to this earnings report. You can see the stocks had a really nice run, especially since August, 105 up towards 120. Big reversal off earnings, but the 50-day was held. Now we're bouncing off the 50-day today, stock finishing up just over 1%. To me, that is the stop. It sort of worked here almost. It did work here for 6 days, and now it just worked on back-to-back days. A close below the 50-day, SMA in orange, which is an institutional moving average. That would be my line in the sand to say, you know what, the trend isn't working here. If I wanted to give it a little more room, look at these these 6 candles here around 117. Now, if it got below 117, I'd have to walk away because now you lost an institutional moving average right in the orange line. Then you lost the previous area where the 50-day worked, and you lost the horizontal where they were coming in and buying that ledge, and that starts opening up the door towards, yikes, gap fill down to 108. All right, hope you find this helpful. Again, I look forward to seeing you guys in this webinar on Wednesday. If you want to attend, you got to register now because we will max out. When we start blowing through half the seats in 24 hours, that's generally a lock for maxing out the webinar room. You will leave this event, just take a picture of the screen if you want, of the hottest stocks for the weeks ahead. This is how we spotted Disney and so many others throughout the year. And when I do these webinars, they're a huge hit. So instead of guessing what's happening in the holiday season or trusting some talking head, let's just go to the facts. Let's just see what the bigger money does to these stocks this time of year. And then we can show their percentages, list them out, and we can even assign buy and sell ratings to these guys too. So it's going to be a ton of fun. Look forward to seeing you there. Wish you guys all the best and happy holidays.